Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for Monday, the 25th of July, 2022, 5:25 p.m. Central Time. Now, it's going to get hard to trade over the next 72 hours in the futures markets. Wednesday, you have the FOMC meeting. Thursday, you have the GDP report. Got to get those two out of the way. You're going to get yin-yang all over the place. Now, the Fed is expected to go with 75 basis point hike on Wednesday. What they say, though, and what the Fed chair says, obviously, in the press conference is going to be very important. The statement, that's when I said what they say. The statement comes from the Fed members, and we'll see what they say about it. There's a huge battle brewing. Example, you've got Morgan Stanley and JP Morgan taking absolute opposite sides. Morgan Stanley thinks more interest rates, much more, are coming down the road. JP Morgan thinks that the worst inflation is peaked, the market's coming down, and that early on in 2023, might be the spring, who knows, they look for the Fed to take his foot off the pedal. Which side of that argument do you believe in? What bothers me is the inflation argument, especially energy, we don't control. And that's the big argument you have. It's a mixture of supply and demand, obviously, but we obviously see across the board right now that even as much as we're slowing down in the world, the price of crude doesn't fall all that much. Yes, it has fallen 20 some odd dollars a barrel off its highs, but it hasn't gone down much more. I was listening to Jeff Curry of Goldman Sachs this morning on CNBC giving his reasons why WTI is going back into the 120, 125 area quickly. And he gives it with the demand cycle, the fact that cash isn't breaking. The futures can go anywhere, we know that, but at the end of the day, they have to go to the cash market. And if the cash buyers stay that strong, with all the discounting, and that's the thinking that the futures markets trade, if that doesn't show up in the cash market, forget it. Then the futures have to go back to where the cash is. I've given you the gist of what he was saying. He was also talking about the grains, same thing, and I agree with him. You don't have the grains out of the ground yet. You know, this is July 25th. There's plenty of things that can go wrong. So more times than not, you get weather scares in the market. We're just getting really hot weather. I think you'd agree with that. We saw the conditions slip a bit today at the end of the day. That added a little bullishness, I think, to the market. When I come to the gold market, it's still a washout. Why? The idea that high interest rates are gold's enemy. That's basically what you're looking at. You can see how the market's been slipping. You're sort of just going back and forth here, and a move's going to come out of this, a good one. I just don't know which way yet. I want to see, as I said, the FOMC and then the GDP numbers. Then I'm going to get very interested in stepping back into these markets. Right now, I see distribution of money just doing that, waving back and forth, but staying under the resistance of the 18-day average, that line in the sand. Remember what I teach. When the market's under that, I have a bearish bias. When it's over the 18-day average, I have a bullish bias. It's my line in the sand, and it's a filter if the swing line is trending, which it's not. You have a lower and low, higher high. In Bollinger Bands, you had run them down, and you've just gone sideways for the past week and a half. When you look at momentum, it's turned up. So when you lose the embedded reading, often price will go to the 18-day average. It hasn't yet. I still expect that it will, but the further each day goes by, it means that you're really weakening gold even more. Even if it gets to that average, it forced the moving average to come down more than price going up. That's not a bullish sign. The gold-silver ratio, silver's still losing to the gold market, and you see that here. You're still in a bearish pattern. Here, too, you lost the embedded reading, and that often leads to a rally to the 18-day average. That won't happen and won't matter, actually, to me. If you come back here, take out this low right in this zone here of the 1795 area, that will not be a pretty sign. You're not that far away. You're 40 cents, but it's still nearly 40 cents. So I'll wait and see what it does. If there's a surprise, I look for it to be the bull side because you lost the embedded reading, and it normally means you're going to get a pop. In the copper, all that I was looking for was a rally back into the 18-day average. It's fait accompli. Happened today. got there. That's from losing that embedded reading. So copper did it, not gold and not silver just yet. In the platinum, this did it. You went back to the 18-day average after you were embedded. And in the palladium, you never did embed. You just got a pattern of a higher high, lower low, nothing there. And obviously the dollar, it's bearish right now, but I wouldn't give you anything for it until we get past the FOMC statement, which again, the market's thinking 75 basis points. And then whatever the GDP number on Thursday comes in with. These are two big time numbers. Now, weighing on other parts of the market, especially stock indices, is this is the earnings season. So you're going to get all the big boys, the Apples, the Amazons, they're all coming at you right now. Be careful. Walmart came in after the market closed down nearly 9.5%, 10% as they're pulling their forward guidance, really lowering it rather dramatically. Be careful of that. I cover all this and a lot more for you in the mornings. Now, let me explain what I do. First thing in the morning, and we're talking here at approximately 9, well, I start at 5:30 in the futures, 9 o'clock on the ETF, so it's two different times. In the futures, I've already read what's going on in Europe, Asia, and I've written about it. I give you the headline, so we start off with the news. Then we open up the charts and we start talking about both longer term, shorter term ideas. On weekends, I cover for you just the weekly charts, and sometimes I'll mix those in as well with these. As you can see, I covered this whole array for you. Each time the same way. There's a scroll bar on the bottom of the chart when you're on our website, so let's assume you just wanted to go to metals. You just pull the scroll bar, it lights up big letters. You're in the metal market. Just let go, it'll play. Each video is averaging 18 to 20 minutes long. So you get plenty of data from me. And that is the key. If you get the data, you have an idea what I'm thinking. Then from there, you make your own decisions. But I'm going to show you what I think, where I think it, why I'm thinking it, the risk associated with the trades, and so on. And you do get the bonus weekly video, because that's where I give you the long-term ideas. To find out more, simply go to our website at iraepstein.com under the word research, or you can follow my cursor, go right up here, give a click, it'll take you right into the area you got to be so you learn more about what I'm doing. I'm Ira. You have a great day. I'll see you tomorrow morning.